Alrighty, welcome back to Weenie Trades. So in this video, I'm going to be giving the Sunday game plan. So I'm just going to be talking about the ETF overview, some stocks that I'm potentially looking to trade, and then the community ticker requests. So let's get right into the video. SPY, nice good uptrend, but it's starting to really get up there. I guess we're still within this channel, so maybe it's reasonable to expect a pullback to the bottom end of the channel. However, we have been going sideways lately. Friday was kind of a weird day where we gapped down, we kind of moved higher. We gapped down off the Amazon bad earnings reaction news. We moved higher, but then we kind of still closed in the lower half of the day. So even though this is a green candle, I don't know if it's exactly bullish. I'm either going to be in cash or shorting this week, but I'm not looking to buy the market up here anymore. So that's just something to think about in the SPY. Of course, each and every day, it's completely different. So we'll be reevaluating at Weenie Trades Live. Let's talk about the Qs, the QQQs. Bullish. The only Qs, tech stocks that I'm interested in is Google, and it will probably continue to be Google until they stop performing. That last earnings report, they absolutely murdered it. Stole all of Amazon's AWS business. They're making a ton off of YouTube. YouTube's probably going to be bigger than Netflix if it isn't already. And so YouTube and Google, I'm obviously a big fan. So if Google starts to drop, I think it's a pretty good deal. Anything close to this 2600 level is close to risk. And then in the short term, if it breaks that, I'm not super interested. Still just expecting sideways movement on Google. But if the market is somehow bullish, Google's my top candidate to go long on. That's the only stock I care about buying. Amazon didn't really have the best price action on Friday. It had the chance to move higher. It was already so far off the expected move. It should have snapped back a little bit more, but it got only a small little rally. Usually what that means is, hey, we're starting to form a bear flag where we have a drop, and now we're basing. Look for a continued drop on Amazon if it starts to break down, underneath or getting close to Friday's lows. That's a little bit dangerous, but Amazon, maybe it's a good deal. Maybe there's a dip buy. I want the dust to settle on something like Amazon before buying it. So it's enticing because it's down so much, but also ask yourself, why is Amazon down so much? Something to think about. Next up, we've got the VIX, the Volatility and Fear Index. And if we're looking at the VIX, we have these spikes. You can see at the peak virus movement, the VIX had a really big pump, dump. But right now we're in a bullish wedge pattern. Not that it's super bullish, but the VIX, if it starts to break out, I might be looking to go long the VIX, long volatility, and you can do that through put or call options on the VIX. Or, if you maybe have a broker, something like Robinhood, you can do UVXY. That's another way to go long volatility. Just be careful on the decay. This is kind of a short-term type of trade. Fear tends to not linger for too long. But if there are those virus concerns, I definitely want to be making money as fear goes up. So kind of a little bit devious and evil, but we're just here to make money as traders. At least I'm just here to make money. So so let's get into the stocks that I'm watching. I'm just kind of looking for some short setups. And the reason for that is if we just go back to the SPY real quick and I pull up an RSI, the Relative Strength Index, we can just see that there's a little bit of a divergence. So what that means is, okay, the stock is making higher highs, or the ETF is making higher highs, as we can see. But the RSI, if I pull this up on the bottom down here, is making lower highs. What that is it's kind of like a hint that the market has a slightly better chance of potentially dropping because momentum is waning. Even though prices are going higher, momentum is waning. There's not a lot of wide breadth in the market. It's very narrow. It's kind of like walking on thin ice is what I like to think of it as. So just keep an eye out for the market. And, if you just want a quick example, there's an RSI divergence on the XLF, the financial sector. This is a great example where financial sectors made higher highs. Look at that. But the RSI made lower highs during that same time period. Do you see that? High, higher high, high, lower high. This was a hint that the financial sector was going to drop. And there you go. The financial sector started to drop. Now the financials kind of just going sideways still, as we talked about, still expecting sideways to slightly lower. There is, I don't expect any melt-offs in the financials because there's always a small bit on the financials. They pay usually pretty good dividends on their stocks. So that's something to think about on the financial sector, but just looking for more so short setups. But so let's check out PLTR. PLTR is in a bear flag formation. This looks like a short setup. Even though PLTR, I like the company. Maybe I won't short it because I like the company. But technically wise, that's pretty bearish. Big leg down, failure to get a strong enough bounce. Chart vibration if PLTR starts to come down. Underneath 22, underneath 21. It's already underneath 22. So if it comes underneath 21 with heavy sell side volume, PLTR could start to get clapped. Keeping an eye out for earnings on PLTR. If we're looking for a potential long trade, I might be looking at Tesla. So if I just quick clear the drawing set, Tesla still range bound. It's nearing that resistance, but we've hit our heads so many times on this resistance. Touch 1, touch 2, touch 3. Can we pop through on Tesla on this fourth touch as the sellers are getting weakened at that $700 a share price level? So if the sellers get weakened, they have to buy to cover, and Tesla could see a short-term rocket ride to potentially test some resistances. First resistance I don't think would be until about 730, but maybe as high as 750, and maybe as high as 800 in the next coming months if the market holds up, of course. So that's Tesla that I'd be looking out for. Next up for another short trade, I'm looking at Airbnb. Airbnb has kind of failed to, really get its traction going. We had a nice good trend, making higher highs and higher lows, but then we started to make lower highs and lower lows, and we're still making lower highs and lower lows. Airbnb might just be a little bit overvalued based off current metrics, but based off the chart pattern, we're right at that resistance. If Airbnb comes underneath, probably underneath 142, I think that I might go short and sell underneath 142 and put my stop loss above the highs, 145, and then just take profits as Airbnb potentially rolls over. So keeping an eye out for that. Again, I'll reevaluate all of these Weenie Trades live. So let's check out Medtronic over here. Medtronic, if you don't recall that one of my investing videos, I was saying, hey, Medtronic's pretty bullish. We're really starting to break out. We back tested the former breakout area, and now we held it as support. So here's our breakout level. Touch 1, touch 2, touch 3, touch 4, touch 5. So many touches. We break above it. Then we come back into it. Oh, yay, we held it as support. That means, hey, we're good to go to the upside, most likely. There you go, Medtronic. On the weekly time frame, still trending up. On the daily time frame, just starting to leave this bull flag. And Medtronic pays a nice good dividend, 63 cents a share every few months. I like this stock for the equity instead of like an options trade, although it is a slow mover, but if it does start to get some legs and move outside the expected move, some call options may be the way to go on Medtronic. So those are my stocks that I'm watching. Now let's get right into the community requests. Let's talk about AMD. AMD, what a week for AMD. Amazing, amazing move. If we look at AMD on just all-time highs, well, I've been talking about this monthly bull flag, move up, go sideways. So we could see multi-months of AMD going to the upside as long as the SPY holds up, of course. The SPY is the rising tide that lifts all boats. And if the ocean is just, having a crazy storm, all the stocks, which are the boats in that ocean, are going to get toppled over and they may get shipwrecked. But no signs of it just yet. We're just keeping an eye out for it. But AMD, nice good move. We're already so extended. I mean, AMD's been a beast. It seems like they've been gobbling up the shares the past few days after that earnings report. So the AMD might be severely undervalued. So AMD could see some continued upside, maybe up to 110. I'm pretty sure that the implied volatility is starting to stretch out just a little bit now. AMD used to not move $5 within a week, but now it's starting to move a little bit more. So keep an eye out for AMD. I do think the dip buy, if the market is selling on AMD, I think the dip buy is the full old all-time high, right about that 99 area, 98. And if AMD does come back into that area, I'd love to scoop up some shares. And then if we start to get that turnaround, I'd like to add and grab those more leveraged call options on AMD. So AMD, in my opinion, is more bullish than is bearish. If AMD continues higher, it becomes very, very risky to buy it, in my opinion, because you're due for a snapback or at least just sideways consolidation, in which case you'd lose out on opportunity cost by being an AMD. However, AMD, great stock. Just let it pull back to that 99, 98 area on the daily chart, especially if the market is weak, but expecting multi-weeks of upside on AMD. So maybe some multi-weeks, multi-month selling puts might be the best way to capitalize off of AMD's movement into the future. Again, I'm not telling you to sell puts. I'm just saying that's a potential way to profit that I might be doing on AMD. So next up we got is Facebook. Facebook, good earnings report, but they had a little bit weak of guidance. Facebook, it structurally doesn't really have too many problems. We're making higher highs and higher lows. And we got this nice good channel. We're coming into the gap, which the gap is at 351.41. I'd expect that, we came close to the gap, but then rallied away. Generally, that means, okay, the gap is not going to be support if we're coming back down into the gap the second time. Anything's possible, but that's just something to be aware of. Otherwise, since we missed the gap, if the market is bullish, Facebook could continue higher. Again, though, with that report, I'd be leaning sideways to slightly lower on Facebook. So maybe some bear call credit spreads might be a way to capitalize off of Facebook. In terms of Facebook, watch out for, the short-term pivot, call it 360. 360, if it's holding hourly above there, could be good to go to the upside. And if it's underneath 360, look for Facebook to start to roll over, maybe come down and test this bottom trend line, maybe call it like 346. I would expect Facebook to probably go more to the downside than to the upside. Next up we've got is Apple, AAPL. And Apple, on the face value, pretty good here. We talked about that weekly breakout over 132, and now we're just going sideways. So Apple, if the market holds up, great. I expect it to just go sideways. I don't expect it to go much above the 150. But if Apple can go sideways, we could break this on potentially bullish. If Apple starts, selling off, there's still tons of space for higher lows, but it might just need more time to gather itself before it can go higher. Apple, not my favorite to trade, but I do like investing in Apple. Not too much. I don't have too much of Apple in my portfolio. I prefer Google, of course, but Apple. If Apple short term, gets underneath, call it 144. Look for Apple to probably come down to something like 138, and that would be based off market weakness. I would expect a bounce off that 138 level. If we get underneath 138, look for some lower prices, probably down to this 135 area. Apple moves, in about $3 increments. If the volatility is a little bit higher, maybe it can move about $3 or $4 increments. But that is Apple. If we check out Square, really just this symmetrical triangle. We have our high, low. Now we've got our lower high set. We're scouting for a higher low, and hopefully that comes above 240 on Square. So Square, I like the stock long term. I think they're going to destroy the banks. Short term, though, since they are a high growth name, they could get a little bit hurt more in a market correction than other stocks because of that high growth aspect of Square. But Square, as long as it's above 240, I think 240 short term is the dip buy. If we don't get a strong enough bounce off of 240, or if we don't bounce at all, Square could be in a little bit of trouble, and we might need to come a little bit lower, probably down to about 230 to 235 on Square. Otherwise, I'd love to, if it starts to turn around, I'm just going to give Square some time, and I'm going to wait till after the earnings report. I'm not interested in going long Square this week, especially since we tried to fill the gap, but we failed. So that means we could be headed down. But if Square starts to, I'd say if Square comes above, call it 260 again, it should get that continued breakout to the upside, or at least it's more likely to get that continued breakout and, take out these weekly highs. Nice, good weekly bull flag. Looking for multi-months of Square going higher. Technically, based off current metrics, Square is overvalued. But if you look at the potential growth aspects of Square, I do think that Square is still undervalued. However, higher risk in the short term for Square. Next up, we've got is GM, General Motors. And General Motors, if we look at the daily time frame, nice good pennant. We broke out, and now we came right back into that support. I'd be waiting for the earnings report to be finished, on Square or on GM, GM 8/4. So August 4th. Unspecified Central Standard Time. But, GM, I'd be leaning more bullish than bearish on this because we broke out, we back tested it. So wait for that earnings report to trade it. But leading up to the report, I'd expect GM to mostly go sideways and stay probably above, call it 50 to 50. It depends. If the market's weak, GM could roll over and get down to that $50 a share. If the market is okay and slightly strong, I don't expect GM to go much above 60. So GM, kind of a smaller mover. If we look at the options chain, only a $3.48 expected move. The risk is, the risk to reward does say, okay, it's fine to be buying here, but I would have a stop loss probably underneath that 50. So, you know, $6 a wiggle room. Do you think you can get $6 or more? There's some resistance on GM at about the 68 to 69 level if it does tend to have a bullish report. So that is General Motors. Please let me know if you have any questions in the comments below on any of these tickers. Parker, you're hitting my mouse. How's it going? Okay, so that's GM. Let's check out NIO. NIO, lots of sideways action. A lot of fear from the Chinese government lately, you know, cracking down on these companies. But NIO doesn't look too bad as much as the other Chinese companies. You know, BABA and DD look a little bit more destroyed. BABA and then DIDI. They're a little bit more destroyed than something like NIO. NIO is more horizontal, which does show relative strength. So if there's any positive China news, I do think that NIO can break out. Again, short term, I think NIO is pretty bullish as long as it's above $43. That's been quite a big pivot for quite a while, where the bulls are winning when it's above it and the bears are winning when it's beneath it. But NIO, so far, we're at trending resistance. We have our high and we have a lower high right here. We're expecting somewhat of a lower high as long as we're underneath, you know, 47. So yeah, NIO, as long as it, you know, holds that 43, I do think it can launch upward. But get beneath 43 again, that would spell a little bit of trouble on NIO. On NIO though, I would be leaning sideways to slightly bullish on NIO. So that's NIO stock. Let's check out Snow. Snow, nice good channel upward. It looks like we're getting a little bit more top heavy up here though. Do you see all these upper wicks? Upper wick, upper wick, upper wick, upper wick. Snow looks like it might want to potentially roll over. However, you know, that would be if Snow starts to come underneath, you know, call it 262. Snow could probably come down and test this, you know, 250 area, especially on market weakness. If the market is nice and strong, I'd be waiting for that clear breakout level over that 275 level on Snow. So 275 is that upside break point. But how much farther does Snow have to go? You tell me. Maybe it'd be lucky to get up to 300 if we get above that 275. Has room to find some resistance in front of 300. So Snow leaning sideways to slightly bearish, but if we break out, we break out. Be sure to watch out for volume confirmation. Otherwise, it could break out and snap back in if there's nobody interested in buying that breakout. So that's Snow stock. Let's check out Coin stock. Coinbase. And Coinbase probably going to get a little bit of a rally with the crypto rally happening this weekend. Based off Coinbase, you know, we're still in a big bear flag. So I don't know if I'd be super bullish on Coinbase just yet. However, if it starts to get some really good volume, I do still think that Coinbase can get up to that 280. Coinbase is a great option, a great scenario where it could probably be a strangle. However, the implied volatility is too high for me to actually buy a call and a put. You know, $13 expected move, that's probably about right. So I don't think I could really make money too much off a strangle on Coinbase. Just kind of have to wait for the breakout and go with that direction. I do think Coinbase can break out or break down. And we're getting into a really tightening range short term on Coinbase. If Coinbase comes underneath 230, I'd expect Coinbase to come down to, you know, 225 to 220 in a fast flash. So that, keep an eye out for that support right there, that 235 support. If Coinbase starts to get above, call it 243, look for Coinbase to potentially break out and maybe go as high as something like 280 and have that target. So Coinbase, nice good binary event. We covered AMD. And then lastly, I just want to briefly touch on AMC. Be careful on AMC. Nice good, you know, pump, dump, pump, less of a dump, more of a bull flag. Held the former breakout area. Bull flag pop, bull flag pop. AMC, expect low, high, higher, low, lower, high, higher, low. AMC looks very weak based off this chart. We see tons of upper wicks, meaning the sellers are constantly winning every time AMC has tried to break out. AMC needs new buyers if it is to actually potentially shoot up. If AMC does shoot up, I'd expect it to find some resistance at about, you know, $49 a share. If it gets above that, I don't think AMC goes higher than 55 on that breakout, and that would be over about $41 a share. So if AMC breaks $41 a share, it could see 49 and 55 in a few weeks. If AMC starts to really break down, call it underneath 35. If AMC's closing hourly or daily underneath 35, look for AMC to absolutely get clapped and come back down to 25 and then probably just zigzag lower. Maybe it has a little bit of squeezes in between there. I'm not going to predict too much on AMC. I'm just giving those key break points. We're in a tightening range on AMC, and it looks like the bears are winning just based off of the chart. Now, fundamentally, anything can be happening behind the scenes, dark pools, whatever it may be. So that recaps today's Sunday game plan. Thank you guys so much for tuning in. Hopefully you feel ready and prepared for the week. Got some good stock breakdowns today, and I'll see you guys tomorrow live. Bye-bye.